What do I buy? What do I avoid today?
Good morning. We still advise investors to stay very defensive. So in a way, for long-term holders, we're advising you to hold mostly the state-owned entities and focusing on the sectors like major banks, major insurance companies, and the utilities, state-owned utility companies over the long run. And in the short run, for tactical ideas, we do believe that there's more that the authorities would have to do in terms of easing in order to support the economy. And therefore, in the short run, trading range, you may want to pick up on some of the state-owned real estate companies too.
Are there any concerns, given that preference for state-owned, say state-owned banks, is there any exposure I'm taking to Russia-related and events that are taking place there that I don't want at this point in time?
Most probably very, very minimal, because the state would have taken action if the risk is very relevant. And therefore, we believe that the risk is very, very minimal there.
And Selina, there's a lot of talk about whether this Ukraine situation, does this in any way derail what has already been this easing bias from the PBOC, or does it give them more inclination to aggressively ease further?
I believe you would give them more incentive in order to support the economy, because previously we were dealing with mostly the domestic issues, especially when the COVID is concerned, so mobility restriction and things like that. And now that the uncertainty overseas is imposing more pressure on the economic situation, I believe that it would give them more incentive to ease a little bit further. And we definitely are going to hear more from the authorities after or during the two sessions that's happening on March 5th.
And that was my next question on what you focus on. When the outcomes come out, when it comes to policy, what are you focusing on the most when it comes to sectors, and how do you position around that now?
Sure. Now, from the two sessions, we're likely going to hear most of the targets that the government is targeting over the short run and over the long run. For example, GDP, CPI, the employment situation, and over the long run, renewable energies and how they're going to encourage the new energy vehicles usage etc. And therefore, we, in terms of positioning yourselves in order to align the investment with the long-term government goals, again, we do believe that firstly, because of the uncertainties out there, both domestically and overseas, we advise investors to stay very defensive. So go for mainly the mainstream companies in the sectors that's going to give you, firstly, safer investment in terms of valuation. So valuation would be too undemanding, and secondly, hopefully give you above average dividend yield, and thirdly, hopefully when the authorities give more easing signals, measures that's focusing on the sectors that's going to benefit from the situation. So mostly would be the sectors that we've mentioned about, major banks, major insurance companies, and the state-owned property companies.
What about major internet platforms and major consumer staples? I know you have been underweight that. Do you expect any policy shift towards a more favorable environment towards those two?
Unfortunately, of late, we are still hearing regulations that's surrounding the internet and e-commerce platforms. And therefore, we remain quite skeptical about those two sectors, so internet and e-commerce. In terms of staples, yes, that's definitely going to be a sector that's going to benefit over the long run from the increasing consumer or consumption power in the mainland. However, in the short run, there will be cost pressure because of the inflationary situation, and some of the companies may not be able to increase their product prices because of the competition in the various sectors. So we would advise selectively increase your exposure to the consumer staples companies, but not overall as a sector.